All right. Well, good morning, everyone. Here we are. This is Brian. We're here for Forex Live. Today is Thursday, December 19th, and we're here for our last class of the season, last class of the year. As we get started, I do need to let you know that unique experiences and past performances do not guarantee future results. I think everyone here knows that. We all are very acutely aware that trading does involve risk, and we should never risk anything other than risk capital. You've got to make a return before somebody comes and takes your thumbs. You may not make the best decisions, right? So make sure we're only trading with risk capital. I know you guys have that slide memorized. I'm going to pause for just a second and give you an opportunity to read through that, and then we'll get going. All right, that should be long enough, right? Let's close that down. Let's get to it. So what are we going to do today? Well, we've got a couple of things planned. We're going to be going through our daily regimen for live trading. So this is the process that Forex Joe teaches us to use every day before we get into the marketplace. It allows us to capture all the pertinent data about what's occurring in the market and ensure that we have a plan to consistently place our trades so that we can have success in the marketplace. So we'll be going through this, and then at the end, I'm going to walk you through trading. We're going to go through 3 pairs and just show how we do the setups, and then after that I'll turn it over to Forex Joe, which I know is why a lot of you guys are here today, and he'll talk to us about what occurred yesterday during the FOMC announcement and how that should shape things up, for the remainder of the year and into the early part of next year. There's also some additional announcements coming up that he'll probably talk about and mention, what impact he's expecting from those as well. So with that said, let's go ahead and just jump right into it. I am going to lead off with this caveat just to let you guys know this is a period that I'm not live trading. So, even though we always use demo in classes, just so you're aware, I stopped live trading last Friday. So the next few weeks, as long as the market makers are out, the big boys are out, I'm out. I figure if they're going to be on vacation, I should be on vacation. And that's just simply because the amount of volume drops off so much, and it causes kind of a whippy market. Doesn't mean there's not tons of opportunity. There's a lot of great opportunity right now. I choose to manage my risk and not be in the market while those guys are away and the volume's low. So let's go ahead and jump into it. It doesn't really change what we do with the process, though. We're still going to walk through the process and see how that can work for us. So, going through the daily regimen for live trading, what we'll do is we'll start out with the euro, then we'll have a look at the pound USD, and then either the US yen or maybe the Aussie USD, and see what kind of trades we can find there. So beginning with the euro USD, just to walk through the process, what we're going to find here is we start off by looking at current price, and current price is at 36.73. And big downward trend after FOMC yesterday, and then just kind of hit a wall and been stuck in a very low channel here over the past session, really since Asia started. So 36.73 is our current price. First thing we do with Forex Joe's methodology here is we're going to pop over to our daily report, and we'll capture the information that he has for us for our channel top and channel bottom. So we see 37.28 is setting up as our channel top, and we have 36.14 as our channel bottom. Now, interesting piece here, 37.28 is a 2 of 3 channels. So this is a daily channel top and a weekly channel top. So short-term and mid-term are both aligning here at 37.28. This is going to give that resistance level a bit more strength if we do move back up to that 37.28 area. So let's put a little star by 37.28. Don't know if we'll get there, but we certainly could. Next is support and resistance levels. So right through here, Forex Joe lets us know what our support and resistance levels currently are. And what we see here is if we're currently trading at 36.73, that we're actually sitting right now at a decision point. 36.73 is a support resistance level. So right here is a bit of a decision point for us. If we break through it, 36.18, and down below that, 3604, which should be pretty strong. That's a big whole number right there. 3600 could be a big number for us. To the upside, if we break back through here, we have 3728, which is a very key level. And so again, just adding additional to that level of strength for that resistance level there. If we break through that, 3751 would be our next stop. All right, so are we trending or oscillating? What's going on right now? Trending or oscillating in the current market? Well, I think we can all agree just by having a glance here at the current market. So the session beginning in Tokyo, running through London into the U.S., looks like we are oscillating. The big question to ask ourselves, though, is has the channel been broken? Have we broken above 3728 or below 3614? The answer there is still no. So we're oscillating. We haven't broken out of any channels. It looking like a pretty darn quiet Thursday to begin with. Now, does that mean it's going to stay that way? Well, who knows? Well, let's gather some more information and see what we're looking for. Today's range, average daily range, well, we've moved about 40 pips, 44 pips to be exact. And this currency pair typically, is moving in that 70 to 80 pip range. Although yesterday, it did move significantly more. What do we have yesterday? Top to bottom, 100 plus, wasn't it? Yeah, 145 pips yesterday on the FOMC announcement. All right, so what news is coming up? And I know that's a big piece that we'll all go through a little bit later with Forex Joe. We had some news this morning. We had unemployment claims. They were negative for the U.S., 379,000. So we had some negative news just now. We have some more news coming up at 10 a.m. Eastern. So here in about an hour, we have the existing home sales and the Philly Fed. So we may see this chop around. It doesn't look like it made any kind of a movement based on that initial report. So we may see it chop around and then make our decision for trading after 10 a.m., after this last piece of the puzzle comes out for the day. So we need to be cognizant of that. So we always check our news source, mainly so we know what pitfalls to avoid, right? We're not too concerned about the news that's occurred already. It is going to give us a little bit of a picture, but the charts are going to tell us that as well. So we're mainly just concerned to see if there's news coming up that's high impact that we would want to stay away from, maybe stay out of the market, knowing that we've got some news coming up. Sounds like Forex Joe made it on. So good to hear you're on here, Forex Joe. Hear you typing over there, clickety-clacking. So anyway, news, yes, there is news. We're just going to put a little note on here. We do have news coming up at 9 a.m., or 10 a.m. rather, 9 a.m. Central, my time, 10 a.m. And the last thing we'll have a look at before we start looking for trading opportunities is to see what's going on in the futures market. What's happening here? Are we seeing a lean towards dollar strength or dollar weakness? And we look at futures to get that, because as money flows out of out of the Dow, out of crude, out of gold, silver, typically it flows in to the U.S. dollar. And then conversely, as money flows into these, as money flows into the Dow, we're taking positions out of the U.S. dollar and putting those back in to these other futures. So that causes that inverse relationship. So it's always good to have a look at the futures just to see what's going on there, see kind of where the lean is. Right now, we are seeing a slight lean towards a positive U.S. dollar, so slight lean towards a positive dollar. Now, keep in mind there, this is on electronic trading, which is pretty heavy, considering the grand scheme of things. Although your pit traders, your floor traders do come online still here, in about 20 minutes. So we'll see if there's any changes to what happens over the past bit. So really, I think that we have the floor traders are coming online in 20 minutes, and then 30 minutes after that we have that Philly Fed. So I wouldn't expect anything to occur until after the new home sales and Philly Fed announcement here in 50 minutes, top of the hour. So when that happens, we should start seeing some movement, either a continuation of what we saw yesterday or maybe a little bit of a reversal. All right, so what are we going to do though? Well, we've placed some trades. We know we've got some news coming up. Let's try to be safe with what we're doing and cognizant of that. So what we'll do here is we know that we've got 37.28 is a key level. That's a 2 of 3 channel. It's also a support and resistance level. If we look on our thermal grids, we even have a thermal grid that's very near there. That's a red grid at 37.25. So what we can do is go ahead and place a trade here. So I'll place a sell. If price pushes back up to this level, then we'll go ahead and we'll place a sell order up here at 37.28, which is right here at 37.27. All right, so here we go. So 37.28. I'm going to park a sell. We do get that high. And we'll keep our stop loss pretty darn tight, just a little over 10 pips. And then I'm going to use our software to go ahead and set my take profit levels as well. Now, 37.28, there really wasn't anything in between there and 37.63. I don't want to have that much. You know, if we do push back up there, I'd like to get my profits taken pretty quickly. So it's funny. There was nothing going on when I walked out to do this call. I'm sitting on a patio, and all of a sudden my neighbors, the birds, became very chatty. So I apologize if you have that in the background. All right, so then we'll set our next level of profit down here at this next thermal grid. So we're going to look for, if this can push back up at 37.28, let's say we get some news that comes out that's a little less than favorable. We're still quite a ways away. If it does push up to 37.28, I would expect it to reverse off of that and see if we can get some pips in that reversal. So I'm going to look to sell here at 37.28. And if I can get this line out of the way so I can select my move to sell. So I'll look to move to sell there. I'm not going to park a buy at this point today. Typically I would park a buy and a sell. I'm not going to look for a buy today. There's just, if we get some positive news, there's just a lot of opportunity for that to continue on from what occurred yesterday. So could be seeing some big moves, so I'm just going to kind of stay away from brackets. Now, with that said, news comes out at 10 Eastern. So 10 Eastern, we can look at the markets and, based on what news has occurred, what's happening in the futures market, just kind of review what we did this morning, kind of go back through that exercise, and then we might be able to find some additional levels to trade from. I mean, we know that 37.63, if I can do this, is a significant level for us for the day. 37.63, we came down to it yesterday. It's been a support level, broke it, came up, and it's just been hovering right here, within about 10 pips either side of this 36.73. I said 37.63. Sorry, just a little bit dyslexic there. Been hovering right around this area. So, based on what happens on if we stay in this area, then the news comes out at 10, and we see it pop up one way or the other, then we could look to see, okay, so let's say if news comes out, it breaks above this, and then retraces, we could buy it off of this. If it pushes down and confirms direction with a second candle, then we could look to sell it off of this level. But for right now, the safe trade to park and be able to have on while I go get a bit of breakfast inside is this 37.28. It's a significant level for us, and I would expect if price does push there, I would look for a bounce the first time, simply because that is such a heavy level from a support resistance standpoint. We look at it lining up on daily channel and weekly channel, and then we also see it as a support resistance number. So with those things all factored in, I can feel fairly confident to look for a bounce. Does that mean it absolutely 100% will bounce? No, absolutely not. I mean, it can blow through it, and that's part of it. We have to take that level of risk. All right. So with that said, let's move on to the next one. We'll have a look over here at the pound USD. So we've walked through that first section fairly slowly. We took some time to go through it. I'm going to move a little bit quicker, less commentary as we go through the pound USD, and then we'll do our third one kind of at full speed here. Really, and that's the beauty of this style of trading. If you're looking for something that you can do in a short amount of time, as the market gets going, it only should take you 15 minutes to go through, 3 or 4 currency pairs, find your levels, set your trades using our software, and then you can move about and to do whatever else it is you might be doing. Maybe maybe you scalp, maybe you have another job that you go to, whatever it might be. It doesn't have to be a huge time-consuming process. We find the levels, we set the trades, and then we're able to walk away. The software will manage the trades for us to ensure that if we do have profit, or when we do have profit, it's locked in, and we have a risk-free trade. We know what our maximum risk is going into the trade, and we keep that risk low at 1 or 2%, and everything else takes care of it. Since you've done your homework prior to setting up the trade. All right, so pound USD. So pound USD, what do we have here? Current price is 63.44. 63.44. Channel information on the pound is telling us. I swear it. Anyway, pound USD is telling us that the channel top is at 65.29, and the channel bottom is at 63.23. So 65.29, 63.23. Support resistance levels. Well, we're trading at 63.44. So what does that have for us? Well, we have resistance above us at 63.51, and we have support below us at 63.20. Yeah, 63.23, which is also in line with our support level down there. If we break through that, we have 62.60, and if we break above 63.51, we have 63.76. All right, so we've gathered our support resistance levels. Are we trending or oscillating for this pound USD? Looks like we oscillated for a bit, and we've entered over the course of really just the U.S. session into a bit of a downward trend. So we are seeing slight trend down, but the big question here, have we broken through our channels? Have we broken above 65.29, or have we broken below 63.23? And the answer there is no, we have not. What's our average range? Well, again, we know this pair typically moves in that 80 to 90 pip range. Today we've moved. What is that? 60? I think that says 60. It's kind of hard to. I have a line right there on top of it. Today we've moved 60 pips. So 60 pips today. So we've definitely got some additional opportunity there on the table. News, well, we know there is news coming out, and we know that the dollar has a slight lean towards dollar strength in the futures market. So, with that said, what do we look for? Well, again, with the slight lean towards dollar strength, we want to look, really at this point, we'd want to look at sell opportunities, not necessarily buys. However, we can do a quick scalp on a buy. So I will enter a buy and a sell on here. The first thing is this channel bottom at 63.23, and it's a support resistance level, so it's a support level on the report. That's giving us a little extra edge right there. So I'm going to enter a buy down here at 63.23. Since we have a key level, we didn't really have any key levels that excited me too much on the euro that we were around. So let me just get the sell out of the way so I can actually see my lines and what I'm doing here. So what I'm doing is just moving my sell lines out of the way right now. All right, so we've got okay, so we've got 63.23. It's a channel bottom, and it's a support level for us. So what I'm going to do is I'll park a trade down here, 63.23. I'll keep my stop pretty darn tight, less than around 10 pips, and then we'll look to take profit at about that as well. So my take profit one, I'm just going to have here at what is that, about 7 pips, I think. Just eyeballing it, yeah, actually a little bit higher than I thought. All right, so we'll keep our take profit one at about 7 pips, and I'll take my take profit two up here at 63.50, which is it's a thermal grid area. It's also a support, a resistance level on our report there at 63.51. So I'm going to go ahead and park a buy right there. For my sells, though, I'm going to get a little bit higher here and look for a sell. We have a resistance level here at 63.76. We've also got confirmation at that level right here, 63.72 is a thermal grid area as well, so kind of that same area. So what I'm going to do to park my sell is I'll park a sell here. Let me get these lines now. I got to get my lines out of the way the other direction. So I'll park a sell down here. A little bit more wiggle room on this one, just to stay above that London high, and then I'll take profit right down here, and my second profit level right here at 63.51 for my sell. So if we get some news that's, you know, I wouldn't say earth-shattering, but if we get some news that maybe has that, it's a low liquidity market, so any kind of negative news could cause a quick blip and cause things to move a little bit further than they normally would. So if this can push up to this level at 63.72, then we'll take that trade and be in. So I've parked both of those trades right here, and again, I think we walked through exactly why I did it. So we've got that behind us as well. So we'll do one more on the U.S. yen, then I'll turn it over to Forex Joe and let him give his insight as to what he's been seeing and how the FOMC will impact us through the remainder of the year, and some other news announcements that are coming up and what their impacts will be on us. So let's just have a look at the U.S. yen real quickly. Currently trading at 104.17, 104.17, and let's see what this is telling us. Again, similar to what we saw with the euro, moved a ton yesterday and now has been caught in a very tight range for the day so far. So channel information here tells us that we have did I go by it? Must have gone by. Let's try that again. U.S. yen. Oh, here it is. Yeah, I did. I scrolled by it very quickly. So the U.S. yen, we have a channel top at 104.05, and we have a channel bottom at 103.31. Now, here's interesting. We see 104.05 is a channel top on all three levels. So the short term, the midterm, and the long term channel top at 104.05. So that's a significant level for us. 104.05 is a very significant level. It's a 3 of 3 channel. Next up, support resistance. Well, we're at 104.17. So what do we have? Well, we're kind of at a decision point right now. 104.16 is our decision point. If we break through that and continue to the upside, our next stop is 105.21. And if we reverse, go back to the downside, 103.47. 103.47. So there we go. Quite a bit of range there, so we're going to have to do some additional analysis on the chart as well. Are we trending or oscillating for the day? That's a big question. What's going on? Well, I think we can all just have a quick look at that and agree that we're oscillating right now. We broke above this level yesterday with news. We've pushed down, and we've just kind of been hanging out right here at this 104.12 area for the day. So not much going on. 104.05, significant level. And we'll put a line there in just a second. Has the channel been broken? Yes. Well, we absolutely can see the channel has been broken there and have been trading above 104.05. Average daily range, well, this pair was in about the 70 pip range. However, it's really seen some big movement lately. But typically, we've been seeing that 70 to 80 pip range here. News, yeah, we know there's news coming up here in about half an hour. And we know that the futures market, it won't have changed too much in the last few minutes and still has that positive lean for the U.S. dollar, so positive lean there. So what are we going to do? Where would we place our trades? I mean, the beauty of this is it keeps our fingers off the button. I don't know how many times I can tell you I've walked in, loaded up my charts, and gone, oh, it looks like a great trade, and I just hit the button, right? Well, you don't have all the data, so the purpose of this is to gather all the information, make sure we've got a good plan for entering the market, and we feel confident with what we're doing. If we don't have a good, confident trade, then we don't take it, right? Confidence is a big piece of what we're doing with trading. Not overconfidence, just being confident that we've gathered the information and made the right decision for where we're entering. All right, so with that said, what are we going to look for here? Well, my 104.05 is a 3 of 3 channel. That's right here, and that's a significant level for us. We've broken it. We're trading above it presently, and right now the market's leaning towards dollar strength. So, my Forex Joe's methodology tells us if we're right here, if we see a 3 of 3 channel and we're trading above it, play the bounce the first time it gets there. So I'm going to follow that and look for this. Now that it's broken through 104.05, is if we do float back down here, I'm going to look to get profit quickly, and I'm going to play this bounce. So I'm going to look to buy off of 104.05, and I'm going to keep my stop loss, if I can grab it here, fairly tight as well. I'm going to keep it just below this area. We're going to keep it below 104. So if it does come back to that whole number all the way, we have a little bit of wiggle room there. There we are. So about 10 pips. We're going to take profit here at about 7 pips, and I'll take profit 2. So my purpose of take profit 2 is just to lock in, or take profit 1 is just to lock in some pips, right? Take profit 2, if we broke through that 104.05, our next level up anyway was 104.16. If we break through that, 105.21. I don't really see myself looking to park that at 105.21. So we'll just look to take profit 2 here at the top of, which was yesterday's high. So I'm going to put a buy in for that one, and I'll leave that one alone right now. All right, so those are the trades I'm putting on based on Forex Joe's methodology. We've gone through it. We've gathered a lot of information, and which kept our fingers off the button, allowed us to look at where the market is, where it's going. It allows us to breathe and make an educated, logical decision about where we want to enter and what we're going to trade. Now, again, as I mentioned up front, I personally am not trading live. I know many of you will trade live, probably right through the end of this week and maybe even into next week. I'm taking a couple of weeks off and not trading live just to be safe with the lower liquidity in the marketplace can sometimes cause wilder swings than you might normally see under regular conditions. All right, so with that said, I'll turn it over to Forex Joe and let you guys hear what he has to say about the FOMC announcement and all the other good stuff coming up for the remainder of the year.
Okay, thanks a lot, Brian. If you would, let's go ahead and go to the Euro US dollar chart. Folks, I'm going to be a little methodical here, a little slow. I've got plenty of notes here. I want to kind of cover a lot today. So we're going to take about the next 15 to 30 minutes. We'll go over this information. I'll tell you that this is our last class for this year. We will probably send out a video. I'll probably do a video next week and the following week. Now, here's what's difficult. Christmas is right in the middle of the week on Wednesday. So pretty much you've got Christmas Eve next Tuesday, the 24th, the 25th, and the 26th. There won't be much going on. So basically you have the opening of the markets on the 22nd into the 23rd. Then you have the close of the markets on the 27th. The following week, same scenario. You've got New Year's Eve on a Tuesday. Nobody will be doing anything there. You got the 1st and the 2nd. Now, they have moved non-farm payroll back to January the 10th. So we will be sending out an email to everybody that attended today, and we appreciate those of you that are brand new. In fact, we talked about maybe doing this once a week. We do these classes 2 to 4 times a week where we go through the scenarios of what the trades are. Brian does an expert analysis of my trading methodology. He sets the trades. He then does a video recap to show you how the trades have done. So if you're looking to get involved, and I think you should here in 2014, I'll be talking more about that here momentarily. The bottom line is we'd love to have you here, 21st Century Forex Trader. We're not going to try to sell you anything this class. So everybody just take a drink of your favorite beverage, or if you need time to go get your favorite beverage, go grab it right now, and we're going to talk about some other issues. Friday, January the 10th is non-farm payroll. Wednesday, January the 8th. We moved this because of Christmas being on a Wednesday. On Wednesday, January the 8th, and we'll have a link when we send out an email for you to go ahead and register, not only for non-farm payroll, but for this 2013 review and 2014 preview, which I do every year. Last year we had some predictions. Some of the predictions came true, some of them didn't, but they were close. I'm looking at some more predictions this year, been doing the research, and it looks to be a great year. Now, for those of you that were involved with us with what happened with the Fed taper, I sent an email out earlier. I also talked about in class that it made sense that if they were going to taper, that they would taper $10 billion. The reason being is this is the last press conference. This was the last time that Bernanke were going to be involved. Janet Yellen's going to take over at the end of January, and they wanted to at least test the market, and $10 billion isn't going to kill anything, especially when you put $4 trillion into the markets in the last 4 years. Bottom line is I sent out an email, FOMC, what I think, what I know, what I can prove. I suggested what would happen if there was no taper, if there was a $10 billion taper, and if there was a $20 billion taper, and we were blessed in the fact that with the tapering, the $10 billion, it did exactly what we thought. We asked that you lower your take profit 1, take profit 2, getting in, getting out the first time. Ultimately, I said I think this scenario is priced in, and the press conference would give us a nice second entry after the initial profit taking. Well, here's what transpired. We had the initial thrust yesterday, and it bounced down like 80 or 90 pips. It was faster than a speeding bullet. Brian and I was on Skype, and we were laughing about it. Then it came back up, and then just before the press conference, it shot back up, and it was in a range of about 50 to 60 pips. Then as the press conference started, we saw the high of the day. It went above 3,800 to 3,810. Now, those of you that get the reports, you know what I suggested in the reports. We talked about in the reports that any time it got above 3,800, you needed to sell the reversal, that we were going to continue to sell the rallies. Now, this wasn't anything that I just talked about for a day. It's something I've been talking about for the last 2 weeks that did transpire and did happen. Now, here's where we were blessed. The fact that on Tuesday's scenario is that we talked about let it get to the 38.10, 38.15 area, reverse and sell at 37.99. That was the experience trade for experienced traders. And for those of you that are not familiar with our trade plan reports, we go through several pairs. We give out trades for scalpers or day traders. We give out trades for swing and position traders. Now, of course, if you're a swing trader, you have to be more patient. We were patient. This pair went, and it was textbook. It went to 38.10. It reversed. The low was 36.73. It closed at 36.92. Right now, under current market conditions, last time I took a look, we were around the 36.73. So from 37.99, it's been as low as around 36.50. That's almost 150 pips that this pair has dropped since yesterday. And everyone had an opportunity, if you were a client, to put this in a practice regimen account because you could have done it 2 ways. Number one, you could have preset, which you're encouraged to do whenever the trade plan alerts come out. You're encouraged to set all the trades, and then when you're trading live, because this is a 24/7 market, and we have people and customers all around the world. Some of you might be trading in the Asian session, some of you in the London session, some of you in the U.S. session. Well, those of you that were trading non-farm, I keep saying non-farm payroll because that's what I'm used to. I've only done 109 of them since 2005. So pardon me, I misspeak a lot. But FOMC, you had ample opportunity because we sit here and watched it bounce around after the initial drop of, 60, 70, 80 pips. Then it eventually came back. It went all the way up. You had plenty of time. It went up to 38.10. It reversed. It never touched again. After it went to 38.10, it reversed. You could have got in at 37.99. You'd still be in the trade after your take profit 1 and take profit 2. Everything that we do is predicated on a 3 lots. It can be regular lots. It can be mini lots. It can be micro lots. But there is a system to our madness. Everything we have here, we have rules of engagement. So being patient, this trade did take off, and you can see the huge spike up. Brian's showing that number up there at 38.09, and now where it currently resides. And understanding our software, we have 2 different softwares that we have. We have the Forex Trader Pro for more advanced traders. It has all these numbers. then you'll see these grids. These grids are for new traders or experienced traders that are looking for a cluster of numbers. And I developed these probability factor numbers using information that I used to do with sports betting. I come from a sports betting background. I've done it for over 30 years, had a successful sports service. Got into the Forex markets in 2001 and found out that the numbers do not lie and that reoccurring numbers happen in the Forex market. So I developed a system to where you have these thermal grids that we call them, and it bounces invariably off these grids, and you're able to have at your disposal, if we're not here, because Brian and I can't be sitting over your shoulder 24/7, a sense of direction if you're doing this on your own. Well, the Euro-US dollar took off, and we are now currently in a situation where here is, under current market conditions, what you want to do for the rest of the day. Right now, the Dow has just opened. You've had a scenario where the Dow's down about 10 points. If the Dow continues to go down, then this Euro-US dollar will push down. If the Dow comes back up and goes above 50 points, then this Euro-US dollar will push back up towards 3,700. You also have gold down. Gold was down $30 the last that I saw. This is good for the Euro-US dollar. Right now, if we're in a range, and as I take a look at this, and we're at 36.68, you want to have a situation where 36.80 and 36.60, it's a 20 pip spread. I see gold's down $35. If you're a scalper, 36.80, 36.60. If it breaks out of those ranges in any direction, you want to get in for 4 or 5 pips. Use the software, take your profit 1. If you're watching this, you might be able to move take profit 2 to 8 to 10 pips. If not, just take profit 1 at 4 pips, take profit 2 at 6 pips, and take profit 3 at 10 pips. Get in and get out the door, get your pips, and get out of there. Why do you need the software? Because the software takes out human emotion, self-doubt, and you making the decisions. Everything that I've done since 2001 has been based on trying to help people understand that if you leave it up to yourself due to inexperience, you are going to make mistakes. It's a 100% absolute. This is why the majority of people do not make it. The people that do make it in the Forex markets treat it like a business and have a game plan. They have a plan in advance. They know what they want it to accomplish. The bottom line is that they have a system in place to where their monthly goal is only 200 pips a month. Now, people I used to get laughed at, scoffed at, chastised. People come on, well, I can make 500 or 600 pips. I can make 1,000 pips a month. Well, okay, that's fantastic. If you are in a situation where you catch trending markets and you're able to accomplish that task, it's like putting up food for the winter. It's like you have a harvest each and every day that you get into the markets. Folks, farmers know that there's going to be good harvest, there's going to be bad harvest. You need to minimize the risk when there's a bad harvest or minimize losses, and then have a system in place that emotionally takes you out of the equation, because as humans, we are wired to not let the winners run. That's why I created the gravy train method with a third, a third, and a third. So after you take profit 1, the software automatically moves to a take profit 1 stop loss. So in other words, let's say you have take profit 1 at 10 pips and the pair moves 10 pips. Without doing anything else, you've garnered 10 pips. Your stop loss is moved to break even plus 1. The worst you can do in that trade is 12 pips because you still have 2 lots open. If you're able to catch a mover, you might have take profit 2 at 15 pips, and then you'd let the last lot run. But if you're in range-bound markets of under 100 pips, you calculate where those range-bound markets are, at what time you're trading. If you're trading at the beginning of the session, which each and every day at 5 o'clock Eastern, 4 o'clock Central, I put out this trade plan report before the Asian market. That's the beginning. So for the 24-hour period, that's how you get your best mover. But if you're getting involved right now, the scenario right now for the euro US dollar is we've moved around 36.50 to about 37.05. It's moved about 55 pips. We've already seen a 55 pip move. We're around 36.65. We're stuck in the middle of the range. So you're going to have a different plan of attack or rules of engagement right now than you would if the reports first come out. And this is the most difficult, even though it's easy, the most difficult situation for new traders to grasp is that you have to have different sessions. Everything that we do is based on rules of engagement. The sessions are Asian session, London session, U.S. session, because we're in a 24/7 market. So if you fundamentally understand what is in front of you, and then you have a system in place, then repetition becomes the key of anything that you do in life. Repetition allows you an opportunity to gain experience. And what we're trying to accomplish is to gain experience in live current market conditions. That's called trading. Now, if you're sitting there watching 15-minute candles open and close, and many times you just sit there for hours, and then all of a sudden you get distracted, you do something else, you get tired. Then all of a sudden it takes off from where you've been waiting, and now you're trying to decide what to do. Your heart rate goes up, your emotions, you start shaking. Should I get in? Should I get out? That's not a game plan. That's like rolling the dice at a casino or trying to play one of 32 or 35 numbers in roulette. What you need is a proven game plan, a proven attack, and understand that we are all just minnows in a shark tank. This is a $5.3 trillion a day market. You are trading money for money. If something happens tomorrow with the U.S. dollar and you are in the Forex markets, you could immediately move your money to Swiss francs or the British pound or the euro dollar. Same is if it's vice versa. Look what happened with the U.S. yen. We've been riding the U.S. yen from 79.50, 80 area from October, November of last year to where it's now currently above 104, and I'll get to that momentarily. So right now, giving you what's happening here with the euro US dollar, you're waiting as a scalper for a breakout. If you're a swing trader, you had ample opportunity to get that trade yesterday because we've been talking about the 3,800 area now for 2 weeks, and it keeps bouncing off that area. The worst you could have done is had it in a practice regimen account. You could have seen how it reacted, and now you're doing something instead of watching 15-minute or 5-minute or 10-minute or 2 minutes or 30-minute candles open and close. You are participating, and you are learning how the numbers work. Once you understand the numbers, then there's going to be times you're going to be wrong. There's times you're going to be right. But the system is in place to help you to where you can have 50% of your trades and still make money. It's like a volume player that's a sports bettor. A sports bettor wants to hit above 52% because with the juice, if you can hit 53, 54%, you're going to make money. But here's the bottom line. Do you want to go 6-4 and have 10 plays and hit 60%? Or do you want to go 550 and 450 out of 1,000 plays and hit 50%? See, you're plus 100 games in one scenario, you're plus 2 games in the other scenario. So now you have to determine what your trading style is, whether you're a scalper, day trader, whether you want to trade news. This is why we do our monthly non-farm payroll to teach you how to trade news events and what has been proven throughout the test of time, how to trade news events. Everything that I've been teaching since 2005 in trading news events is still works today. It's called repetition. We just keep doing it, doing it, doing it, doing it. Well, those of you that are interested, let's talk about what happened yesterday in quantitative easing. By the way, 2013 was far from a vintage year if you were a contrarian investor in the stock markets. You see, the continuation of the global equities rally led to one of the biggest momentum years since 1998. In other words, the stock market went berserk. It went crazy. Why? Because of quantitative easing. The Fed has pumped $4 trillion into these markets in the last 4 years. $84 billion a month was a nice way of getting to $1 trillion. Why do you think they arrived at that number? Well, if you take 84 times 12, you get a little bit over $1 trillion. But 84 billion a month is not too bad under the scheme of things under current market conditions. Now, we had a balanced budget amendment and a balanced budget as early as 1996 here in the United States. Then in 2000, people that didn't really could fathom the number trillion, since 2000 or the 21st century, we're now $17 trillion in debt. You see, people think the economy is getting better. Don't believe the hype. It's getting worse. I'll be talking about that in the January 8th webinar. I'll also be talking about that as I write. And one of the other benefits that you get if you are getting our services and getting these reports is that daily I give you a lot of information, and weekends I give you a lot of information. It actually makes you think and understand what's really happening under current market conditions. You see, quantitative easing has not rescued the economy. It's made the long-term problems a whole lot worse. So what they're doing is they're winging us off being a crack addict, or a cocaine addict. That's pretty much the analogy that I use. They're winging us off. But how long will it work? That will be the key that will have our sense of direction in 2014. Right now, small business is dying in America. At this point, only 7% of all non-farm workers in the United States are self-employed. That is an all-time record low. A lot of that has to do with jobs going out of the United States and because of quantitative easing. You see, the people that benefited from quantitative easing were the people who had money. So now the game has changed. We have a paradigm change. You can make a fundamental decision because since the financial crisis of 2008, the top 1% of incomes have grown by 31.4%. Wait a minute, what did you just say? Since the Too Big to Fail, many of you that might have saw that movie from HBO, it was a great movie that explained what happened. Since that financial crisis of 2008, the top 1% of incomes, which none of us will be able to compete with, even if we all put all of our money together, has grown by 31.4%, while the bottom 99% of people or incomes has grown by 0.4%. You see the disparity? No matter what they tell you, no matter what they say, no matter who's in office, whether it's a Republican or Democrat, the elitists are the ones that are benefiting. Now, we've talked about this being a $5.3 trillion a day market. We're not trying to compete with the elitists. We're trying to take a piece of the pie. All we want to do is benefit from taking a piece of the pie. And in the process, each one of your goals is to become a millionaire. You see, more millionaires have been created over the past 5 years than during the entire 8 years of the Bush administration. Now, that is started in the year 2000. We're currently in 2013, getting ready to go into 2014. So in the last 13 years, more millionaires have been created since the 2008 financial crisis than the entire 8 years of the Bush administration. So here's the number one question that everybody here needs to answer. Did you become a millionaire in the last 5 years? If you did, congratulations. You will be taken care of. If you didn't, you need to start investing in yourself. Warren Buffett's wealth went upwards of $37 million a day in 2013. $37 million a day. Well, some of us would like to have $370, $3,700, $37,000, $370,000, $3.7 million, and we'd be happier than a tick and a hound dog. So what you need to do is come up with a game plan that's going to give you an opportunity. So the Fed policy of quantitative easing has fueled a surge in the value of financial assets. Right now, the wealthiest 5% of America owns 60% of those financial assets. We keep seeing the stock market go up and up and up. Why? Because the people who have money, the people who are able to get the money, are putting it into stocks. The top 10% own 80% of the stocks. Now we got to stop there because we got to let this sink in. The top 10% wage earners, money earners, wealthy, own 80% of the stocks. So they continue to have their assets go up while the people, the 99%, continue to get pounded. If you're an American with at least $100,000 in disposable income, all of those people have $6 trillion in savings. That number could double in the next 2 years. So you have a chance. You're never going to be a shark unless you come up with something of substance that's going to sell to the masses. For those of you that don't have that and you're looking for wealth creation, it's going to slow next year. So you need to make a fundamental personal choice of how you want to accomplish taking back full control and full responsibility for your actions. This tapering is going to be interesting for 2014. I won't tell you why right now. But there's going to be a lot of information, a lot of rhetoric, a lot of rumor versus fact. Unless you have a coach, and if we're not viable or within your realm of being your coach or your mentor, find somebody else. I'm urging you to find somebody else. It's going to spread like wildfire here in the United States. The number of Americans on food stamps has grown from 17 million since the beginning of the 21st century or the year 2000 to more than 48 million today. In 1985, there was more than 18,000 banks in the United States. There's about 6,800 now. The U.S. banking system has $14.4 trillion in total assets. The U.S. government has spent $3.7 trillion on welfare programs over the past 5 years. You can go on, and you can go on. Now, what does all this have to do with Forex trading? I believe that the Forex trading, and I've stood by this for 5 years, is going to create more new millionaires this decade than any other business outside of those in the stock markets. And a lot of people that were in the stock markets were already rich. The facts hold that up. So if you're not already a millionaire, or if you are a millionaire and you're not liquid, how are you going to take care of you and your family in catastrophes? How are you going to take care of you and your family when only 40% of all the adults in America have a full-time job at this point? Did you know that the unemployment rate in the Eurozone recently hit an all-time high of 12.2%? Do you see anything that's even remotely talked about in that scenario of late? No. Do you know that student loans are up over 60% the last 3 years? Well, if you were a client here at 21st Century Forex Trader, you would. We talked extensively since 2007 about many different subjects. We talked about the credit card fraud that was perpetrated, that had the burst, and now how they went from the credit card fraud to the student loans. You know, the government is making more money off student loans than they did off companies that were making off credit card fraud. It's like they learned something. Let's get everybody educated. But here's the problem if you're going to college. You're getting into debt. Many are still living at home. By the way, you can stay on your parents' insurance till you're 26 years old, I hear. But you're not getting the type of jobs for your education. There needs to be a paradigm change in the type of education because we went to more of a service technology than an industrial age. So those are a lot of facts and information that you can chew on. Now, let's go to the pound dollar, Brian, if we'll bring that chart up. And what's interesting about the pound dollar is that while the euro dollar went down yesterday, which was anticipated, the pound dollar went flying up. The pound dollar moved over 200 pips yesterday and was up over 100 plus pips, up near 6,400. And as we take a look at what's happening today, we've kind of fizzled at that 6,400 range because we've seen a high above 6,400 and we bounced. We've seen a high yesterday of 6,483 and we bounced. So getting near 6,500 after that initial thrust, we've seen a move of over 100 pips down. This is what the Forex markets does. It gives you an opportunity if you understand ranges. Now, here's what's interesting about ranges. A range could be 5 pips if you're a scalper. If you're a day trader, it could be 30 pips. If you're a swing trader, it could be 100 to 500 pips. And if you're a position trader, it could be 500 to 2,000 pips. It just depends on what charts and price action that you're using to participate in. Right now, with the pound dollar, anytime this pair reaches over 6,400, I would sell it because it's overbought right now. We're currently right around the 63.60 area. We've been as low as 63.40, just below that. We've been as high as 64.10. So it'll be interesting to see what happens. As you take a look at this chart, you can see that thick thermal grids where it's hit several times and bounce down. There's just a few simple rules that we use in our thermal grids for our Fast Track Trader software that's part of the software packages that you can participate in. And you practice. You set these trades. And one of the key areas that we found, and we did surveys forever, I've did surveys now for 10, 11 years, is that many traders said, we don't have enough trades to trade. So we overcome that issue. I put out a daily report. I used to do 4 or 5 pairs daily, pretty much do it now with the trade plan alerts, giving you specific areas. But the daily report is 22 currency pairs. It's computer generated, and it gives you an opportunity for both buys and sells to have trades along with a series of numbers. That's not that hard. We have videos to where you can learn. Not going to learn maybe in a week or 2 weeks, especially if you're brand new to Forex, but you want to learn a vocation for life, so it's going to take you a little bit of time. If you will give the Forex markets a quality of attention participation, you're going to be rewarded. You're going to be rewarded in the fact that you're going to start learning how to take pips out of the market and not be greedy. You don't have to sit here and be greedy and try to get 500 pips every month or 1,000 pips every month. If you get it, it's a blessing. Your goal is to get 200 pips each and every month. If you get 200 pips each and every month and you do this over a 3-year period, and you do a special and learn a special trait called compounding, that's a key word you want to learn when you're investing. That means don't take any money out of that account, but let it compound. You will see exponential growth. And that's what it's all about. Now, some of you might be 3 to 5 years from retirement, some of you 5 to 10, some of you 15 to 20, some of you 30 to 40 years. But the time has arrived for you to make the choice, the fundamental choice, to put some of those eggs up and get ready for some rainy days, especially when you have some good harvest. Because there will be some bad harvest coming. And I'm not just talking about in the Forex markets or talking about in life. I'm talking about what's going to be happening in the world. And I've given you a lot of stats that people could not or thought would be believable. Now, we had a lot of my predictions in 2012 and 2013 that are going to happen. But because of logic and common sense, they didn't happen because of the printing press. Now, I use the analogy of the printing press, which means the Fed just kept printing money. Well, in today's electronic world, they just hit a button and money floats around. It's real simple around the world. But by printing money and having this fiat currency out there, this is how we're in a situation where we're $17 trillion in debt. Now you're going to have a battle, political battle, between the two areas of the Republicans and the Democrats. And the bottom line is it's going to be tough on you voters out there to try to find who's real and who's really trying to do what they need to be doing to help the overall economy. I'm not concerned about myself being in my 50s. I'm concerned about my kids and my grandkids, and so should anyone that's past 40. If you're younger, you think you're invincible, but there will become a time where you wish you'd got started early, so we want to help you get started early. Let's go ahead and go to the US yen, and this is really interesting about the US yen because now that we've touched the 104 area, the US yen moved about 160 pips yesterday, up 104, and we hit that 104 area. We went to 104.16 yesterday before we closed at 104.07. And taking a look, we've only went to about 103.80, and we've been as high as 104.38. There seems to be a barrier, and I talked about this in the report, okay? And let me grab the report real quick so I got the right number. I thought the barrier was going to be near the 104.50-55 area. Well, it seems to be that we hit 104.40 and it bounced. So you've got a situation to where the barrier that you're going to be taking a look at is 104.55 is what I put. There's talk about serious issues at 104.55. Well, we hit the 104.40. Once you get to this 104.40-55 area, be cognizant of you're trying to buy it for the rest of the week, going into next week and the slowdown. I think you're going to run into a brick wall. Now, there might be some news events. There might be something that takes place. The other part of the equation, as Brian talked to, is that most of the big traders that stepped out yesterday went ahead and had areas. This is why you saw a lot of movement. But they're on holiday until after the first of the year. They really won't be back until, January the 6th. So you're going to have lower volume. With lower volume means more volatility. But the volatility is going to be range-bound. So if you're a range-bound trader, these are nice areas for you to be scalpers and day traders in range-bound areas to be able to pick up some pips. So the US yen is going to run into a lot of issues. We ran into it at 104.40 and a lot of 104.50-55 area. Look for any rebounds. Right now, we've developed that 103.80 is support. So right now, if this pair, which is trading at 104.13, if it dips below 104, you got a 103.99 would be a sell. If understanding you're going against the trend, but you want to scalp for just 4 to 6 pips. If it hits the 103.80 area and reverses, then you're looking to possibly get back in on a buy at either 103.90 or 104. But understand that 104.40 to 104.55 is going to be an area that you're going to run into a brick wall. So those are the ranges. So I've covered the ranges for the Euro-US dollar for today. I've just covered the ranges for what's going to happen for the US yen probably for the rest of this week going into next week. I'll have more information with other pairs in the reports. Here's what I want to close with. When we made our predictions here last year, we tried, as I alluded to earlier, to use logic, common sense, and probability factors. A lot of what I do is based on numbers and probability factors. What you can't take into consideration is human idiots and human greed. You can't factor those in. Greed took over in the fact that they had to keep the markets propped up to not have another crash. But the rubber band has been stretched. I will be talking about here in January, with the rubber band being stretched, what could possibly happen if it snaps. That'll be on January the 8th. We'll have non-farm payroll on January the 10th. Now, after January the 8th, that Thursday, you'll have the ECB and the Bank of England. So that week from January the 6th through the 10th will be huge in the markets. So after we're coming off of the next 2 weeks, we're low volume, little volatility, range-bound markets. Pay attention. Do not have as high expectations if you're a swing position trader. We got our swing trades in after the FOMC off the 3,800. But understand what your range markets are, and if you're going to participate, practice, practice, practice. Because if you have not been involved in the time off for the 2 weeks of Christmas, you could get crazy real quick. Now, on the other end of the equation, if you've been up with us for the year and you have your profits, many of you will just shut down your computer. You won't be doing anything. That would be the best advice. If you're not experienced to where you're trading live, and you have some time off besides spending it with family, and you got an hour or two each day, and you were looking for something, instead of getting on Facebook, getting on Pinterest, getting on computer games, get into the markets each and every afternoon, wait for the reports to come out, put them in a practice regimen account, and then trade 1 hour or two a day using those numbers each and every day. And use this analogy. Tell me what you think, what you know, and what you can prove by participating in the markets. Okay? And being able to participate in the markets is going to give you an ample opportunity to gain experience. Once you gain experience, you start learning the realities of the Forex markets and how 200 pips a month can change your lifestyle very quick. 50 pips a month could change some of your lifestyles for the better. Now, we have competitive rates. It's not that difficult to sign up or to join. And we'll send you an email about that later, and you can all take a look at it. We'd love to have your business. But for today, we want to thank each and every one of you for taking time out and joining us. If you like this, send us an email and let us know that you'd like to see us do this more often. We're thinking about doing it maybe once a week, and this is something that we might add to. But by the FOMC yesterday, there was 3 things that I gained. And I'll talk about those 3 things in the report that'll be sent out later on today. So, once again, thank you. Brian, I'll turn it back over to you, and if we have any questions, we'll jump on and see if there's any questions. But other than that, let's be cognizant of your time. Usually, folks, we're only here, Brian's done within 30 to 45 minutes. We usually an hour. We've been here for an hour, so hopefully this was helpful for you, and you've learned a little bit from what I've said today, and it's made you think. That's the bottom line. What I'm here to do is to make you think, so you understand that you have a chance to be some of the small percentage that win if you have a game plan. There's people that are very successful in the Forex markets. You just have to make a decision of whether you want to be one of them or not. And if you do, 21st century Forex trader is where you need to be. Brian, I'll turn it back over to you, my friend.
All right. Well, thank you very much, Forex Joe. Thank you for everyone being here with us today. I know you have a lot of other things that you could be doing, so it's always very humbling, and it's great that you took the time out to be with us today. I do appreciate that. I know Forex Joe does as well. So thank you very much for being here. Glad you could join us, and from there on, just trade safe. If you're going to keep trading for the day or the week, just trade safe, and we'll look forward to seeing you in 2014. So with that said, let's go ahead and wrap it up, and we'll see you next time. Happy New Year, everyone. Bye.